All right, welcome back, everybody. This is Trader Roundup, where highly tuned, like-minded traders work together, become 1% better each and every day. This is another episode of Fun Fridays, and I got my good friend Texas Trader on board. What's going on, Tex?
How you doing, boss?
I'm good, man. So, if you guys don't know who Tex is, and let me just got these full screens going on.
There
If you
we
guys
go.
don't know who Tex is, I actually met Tex in RealWeirdGene's room, and he was one of the educators that was mostly doing indices during the New York session, the AM session. And he was kind of like low key at the time. Like he didn't have a big social following, but I just hopped in a couple of his live streams, and I could tell like right away that this guy really knows his shit. So welcome aboard, Bailey. If you don't mind me calling you that.
Yeah, I appreciate it. Just so everyone knows who I am, y'all can call me Bailey. Y'all can call me Tex, whatever y'all like. I go by Texas Trader, mostly in the community. But yeah, no, I'm good. Happy to be here, man. Appreciate it.
Yeah, thanks for coming on, man. And I'm gonna bring my buddy Rodrigo too. I don't know if he wants to be a part of this, but so
Hey Bailey, how you doing?
What's going on, boss?
Great to have you here. Thank you for being here. Excited
Thank
to
you, man. I appreciate that.
no camp today, boss.
and learn from you, mate.
Oh yeah, are you back in Gene's group?
No, not yet.
Not yet.
You haven't invited me yet.
I got you.
Yeah, so Bailey, I just wanted to go over with you, like, how did you get into trading? Because I don't think we really talked about it. Like, how did you get an ICT, and like what's like kind of been your journey?
Honestly, it's been a long one, longer than most people realize. And like you said, not a lot of people know, but I actually stumbled upon trading by accident. Of course, I met someone in the airport who was part of the IML iMarkets Live group, and yeah, and she was like begging me for a charger, and I was like, "Oh yeah, you can use a charger," and she's like, "Oh, thank you," and like freaked out. We did a 180 with her expressions after that, and was like, "Okay, we're good now." And I was like, "Are you good? Like, is everything okay?" She's like, "Oh yeah, I was in a trade, and I was down, and I just wanted to close out before it stopped me out." And I was like, "Oh, okay, so you like invest for a living, you know how everyone says that whenever they don't know anything about trading, they're like, oh, so you do investing in stocks and stuff." And no, she introduced me to like the Forex market and everything, and didn't learn a lot from them, but I did about a year and a half in get this mega file that had Steve Morrow content, ICT content, everything. I think your guy Casper actually got the same mega file that I did.
Oh my god, yeah.
Yeah.
He's the one that said he found FTMO, I guess, through one of those mega file things.
Really? See, I didn't find any prop firm challenges, sadly. I wasted about another 2 years after that trying every strategy and failing everywhere. And what's crazy is I had the mega file with ICT content, but I was like, man, this is so much stuff. I'm not going to go through this. But after failing every other strategy, I got convinced by this guy, Bilal. He lives up in Vancouver. Really cool guy. Got convinced to join Gene's group back in IML. So I was like, you know what? I'll give him one more chance. And with Gene, I actually had a light bulb moment that turned me on to the idea of like, okay, so this stuff really works. And I think that was actually whenever we were going into it was like still whenever we were in that choppy bull run back in like 2019 before that big expansion in 2020. And he just said some things on a call that made me click. And I was like, wow, okay, I really got to go through this content. And I ended up joining ICT's mentorship in February of 2020 and became a charter member literally right whenever COVID went down. And around that time too, about 6 months in, I told Gene, I was like, hey man, I'm going to take a step back because, I feel like I know a little bit of this stuff, but I really need to hammer it home. And that's really whenever my trading I always tell everyone that's really when my trading journey started, because I took it seriously and I focused on one asset. I followed all of ICT's rules basically, right? I stuck with a single asset, stuck with a single trading plan, stuck with a single time, and doing that over like a span of like 6 months. I ended up running up an account, and after that, I found out about FTMO. So I pulled all my money out of my private account. That way, I had all my bills taken care of, And I just attempted challenge after challenge until I freaking passed one, man. But I failed a lot. A lot of people don't know that, but I failed a lot before I got actually passed one.
Yeah, I mean, I think the biggest benefit to having a prop firm challenge, right, is if you do pass, now your own capital's not at risk. So even if you do spend a lot of money, right, you probably might have given that money back in your retail brokerage account, right? Why
Mhm.
not actually just do it in a prop firm? Now you can actually trade size. Like I think a lot of
Yeah,
people don't realize like that jump from your personal account, right? Like maybe you're trading one standard lot, which is like pretty big, you know what I mean? Like for me, it was a huge jump going from like micros or minis up to a full
yeah,
standard lot. But now the leverage allows you to trade like five standard, 2.5 to 5 standard lots, like I guess in a reasonable manner and not risk too much of the account. Right. In my opinion, that's a huge jump. So like when you stumbled into Gene, he was still in IML, like he was actually teaching trading in IML because I
he
heard
was.
that they don't really teach trading in IML.
Yeah, so I don't know if you know anything about Tim Trades. You
No,
ever
I don't
heard
think
about
so.
him? So he ran this group called SMT. It's this smart money team, and he had London Snipers, which was with GBP God, which was with Jeremy, and then he had Melvin Checkmate. Then he had actual London Boys, which I can never remember his name, but these guys were running his sessions for him essentially, and Gene was the one doing his New York session for him. And so he was like an understudy of Tim, but Gene just kept grinding. I think Tim got a little complacent, and Gene very quickly outgrew him and decided to split up and create the Forex Cartel. And that's where the Forex Cartel came from. It was in IML, and
That's
so
interesting.
yeah, so I was in there since like the beginning. And whenever I left IML, I told him, I was like, hey, look, if you keep me in your group, I'll teach for you and I can still learn from you and everything, but I'm not going to pay any IML subscriptions. And
Yeah.
at the time, really, I was one of the only guys in that group who was a little consistent in terms of being able to make an analysis, make a trade off of that analysis, so on and so forth. And so that's when me and Gene actually became really, really close. And he really mentored me, really went hard, sent me a bunch of stuff. I mean, we hopped on videos of what's that guy's name? One of the guys ICT always talks about for his fair value gap concepts. What is his name? I can't remember his name ever.
Chris Laurie or
It's not Chris Laurie or no? Somebody
I
else maybe?
actually think it is Chris Laurie, yeah. And Chris Laurie has a video talking about aggregate feeds and how the money is paired up with different levels of the market. And that right there, when me and Gene were going over there, we spent like 3 hours on this call just dissecting everything and trying to piece together what connected with what with ICT's content.
Yeah, that's more like the institutional framework behind like how markets operate, right? And me, Rodrigo,
Exactly.
we're just in London at the Fivers event, and like we got to hear from a bunch of institutional level people. And it honestly it really does make sense because like a lot of big money, they can't fill their orders all at the same price. So that's kind
Exactly.
of what happens. Like you get the initial displacement, and then when it retraces back to that fair value gap, now they're adding into their position because they can't fill all of their orders at the same price. So when I heard that, I was like, wow, that just makes so much sense. You know, that's why levels get retested all the time, right? Because they have to get efficient pricing at specific levels. So it has to, retrace to that specific price where they can fill more of their order.
Yeah.
yeah.
No, I really found that side of trading to be super, super interesting. I tell that to all my students, I'm like, I know you guys probably don't want to learn this, but learning the framework behind it and learning what's really going on behind just the candlesticks and understanding the flow of orders and how orders are paired, understanding that really gets them into a different mindset than it would just be like looking at patterns or looking at just the ICT concepts by themselves. Because when you get the why behind it, not only do you, I feel like, have a better understanding of what you're doing, but you also have way more trust in what you're doing because you understand that there's a reason and a narrative as to why this move is happening or that move is happening.
Yeah, exactly. Like you're not trying to force your bias onto the market, right? And that's kind
Exactly.
of what I noticed about you. Like, and specifically the guys in the Forex cartel, like Gene and you guys, will come on live streams, take a loss, and walk away for the day. Which I know a lot of people listening probably can't do that. So, like, what was that journey leading up to that, like mental discipline? Like, how did you build that mental discipline to say, like, yeah, I'm not bigger than the market. Like I can take a loss and be okay with that. You know what I mean?
That's honestly, even to this day, every now and then I have to keep reminding myself verbally, because I get that little tick in my head that I'm like, oh man, I know I can get that back. But truth is being under Gene and seeing how disciplined. I mean, even if you want to say Gene's not the best trader that that's fine. I couldn't say anyone that's more disciplined than Gene.
Yeah.
And so, like, being with him for an extended period of time over a span over a few years, working with him closely and having him really mentor me, I think drilled into me like, hey, look, you've seen this form 4 days out of the 5 days this week. That means next week you got at least 3 or 4 days it's going to form. And then if you think about it, you got like, what, 270 something trading days in a year. So this is most likely going to form 200 to 250 times.
Mhm.
So if I'm worried about messing up one time and I still have 200 more attempts at this, what's so significant about it? It's just like the theory, of how everyone thinks that their life is so meaningful and so impactful, and then you look at the grand scope of things, you're 1 out of 8 billion, and then you're one planet out of a billion planets, and one solar system out of a billion, so on and so forth. It's the same thing with trading, right? It's one setup out of the day when there's many setups, and then there's 5 days trading every week, and then there's 4 weeks in a month, so on and so forth. You have to really look at it as long-term, big picture. This loss means absolutely nothing.
I think a lot of people get caught up in that, right? Because when I look at my equity curve, right, I want to look at a 6-12 month period. That one loss on that one specific day, like over the course of a 12-month period, when you look at your equity curve, you're not even going to recognize that data point in that 12 months. You know what I mean? It's just going to be like a small dip. Maybe it's like even a couple losses in a row, but over time, like your equity curve, you just want it to be steadily rising, right?
Yep.
So, going into like having a mentor and having like that accountability partner, like obviously Gene was there for you, right? And now you're an educator yourself. So, what is it so important about having somebody that's holding you accountable? Because for me, like trading is such a lonely thing. When I first came into trading, I mean, it was a long period of time where I didn't even reach out to anybody because I thought I could just, beat the markets on my own. Like it
I
was like
think
literally 5-6 years I just went by and I didn't have any friends that traded. So like, yeah, how important is that to you and your students, right? Because now you have a bunch of students that have gotten funded, gotten payouts. Like, what does that feel like? And how big of a role does it? It's your burden essentially to make sure your students succeed, right?
Yes, so 100%, 100%. And you are correct about trading being a lonely endeavor.
Mhm.
Just this year, like I said, I'm like almost 5 years in now, and this is the first year that I've had some of my friends actually start to get onto trading and really grind with it. And so like that's been amazing. But past 4 years, it was my mentor Gene really and ICT who were the only ones there for me,
Yeah.
and teaching me the things that I needed to know. And so I try to adapt what Gene taught me and kind of give it my own style, right, with my own experiences. What are the deficits that I had? And so I feel like whenever it comes to my students, I always try to take that personally, because I know that if I had someone that was really just drilling it into me, saying, hey, don't do this, don't do this, don't do this, not just this is how you find setups and this is how you do that, that's great. But when you see something and you shouldn't be doing it, what's the willingness you're going to have to actually say, okay, close the laptop, walk away, go do something else? It's so difficult, and a lot of people, now obviously people are starting to talk about it because a lot of us are growing up, we're realizing the importance of it. But the people that are newbies still coming in, still at the beginning of ICT's content, they're hunting for that next best concept to trade. They're not looking at the month 2 content where he's teaching you, hey, you get 50% out after one RR, and then you can let it run. That's what allows you to trust setups. That was in month 2 content,
Mhm.
and that's something that I didn't apply until like 3.5 years into trading. And it could have saved me so much time and so much money. So I think my job as an educator not only is, yes, give you guys setups, help you understand the concepts and the whys, but also pass to you the discipline and the experience that I had. Just like ICT talks about when he says, I don't want you guys to have the same pain as me. That's 100% correct, right? I don't want you guys to go through the same pain and the same process that I had to go through when you don't have to. There's so many things that you guys can just leap over, and you won't have those mental scars that ICT always talks about. You won't have those memories, those painful memories where you're like, man, I remember I tried to take this trade and, I
or
got
even going live before they're ready, right?
Yes. Yeah.
Yeah.
And that's another thing too. I try to tell my friends, like, don't even worry about it. Don't even worry about it trading with your own money ever. Stay away from using your own money. Because if I'd save thousands of dollars if I just saved my money and just done prop firms, if I'd known about them. And so I want to make sure that they know about that, because if you're trying to trade your own money, one, you already know this as being an experienced trader, right? You're going to lose. And how are you going to handle losing as a new trader? It's very, very difficult. And it's whether it's one loss or 5 losses in a row, it's only going to compound your problem. And so if you just stick to a demo for a certain amount of time until you actually get a model that's cohesive and coherent with what your psychological aspects that you have are. So like if you're short tempered, if you want to get in and out, or if you're kind of laid back, you want to minimize risk, like what's your risk tolerance, all those things, right? Those play into your model. And so if I can help you build that model on a demo where you're not afraid of losing any money, by the time you trust that model and you have it officially, you won't have any battle scars. You'll have times where you're like, okay, so I was wrong here. Let me see why. Versus, oh my God, I just lost $500 or $1,000
right now.
I need to get back in, and then I lose another $500,000. So that's a huge part of it for sure.
What I love about your journey is the fact that you teamed up with someone that had more experience, that had the battle scars, somebody that, because there's a lot of neuroscience behind working with a mentor, someone that has gone through those experiences. And I'm sure that a lot of the mistakes and I guess intuition that he's learned over time, that was quickly passed on to you. And there's these wonderful, amazing things that happen in our brains when we work with a mentor, when we learn from them. And I mentioned it in previous podcasts, but for those listening, these are mirror neurons. So mirror neurons are specialized brain cells that fire when actions are performed and when they are also imitated with others. So if you see certain actions, certain responses in others that are appropriate, especially with high performance, you begin to mirror those neurons. Your mirror neurons are activated to create new neurons. So you gain neuroplasticity through learning. And we see this all the time with teamwork, team sports. If you're partnered up, like for example, boxers, right? A boxer is usually, as they're coming up, they usually have a really good sparring partner, if not at the same level, right? And to be a sparring partner, man, you especially to a top level boxer, you got to yourself be really, really good. You got to challenge them, right? And other amazing things that happen in our brain are social brain networks. So these are specific networks in our brain that enable social cognition through interaction. So we are social beings. And so I've spent like my first 4 years, it was just me and my cousin, and we learned so much together. But it wasn't until, because we were at pretty much the same level, he was always a little bit better than me. It wasn't until I actually started hanging around with traders that had been doing it for 10 years, managing live trades over 7 figures, doing it day in, day out. That's when my trading really took off. And so I really, really resonate with your story when you teamed up with Gene and learned from him, and obviously it's made you the trader you are today. It's almost like accelerated your development, right?
Yes, 100%. If I didn't have Gene, I think I will never say that there's anything I can't do, right? I mean, that's one of my favorite sayings, quo non ascendum. It's a Latin phrase. It means to what heights can I not ascend? And so I love that saying, but at the same time, the learning curve is cut so far by exactly what you're saying. I 100% agree with you. The people that you hang around and surround yourself with, if they're successful in doing it and they can physically prove and show through live trading, through live calls that they are successful and they can teach you and help you understand things, I think that cuts your learning curve almost in half. Because if I had gone through and done the things I was supposed to and actually listened to these people, ICT, Gene, right, that were the biggest influences on my trading career earlier than I did, I think I'd be even more of an astounding trader than what I am now. So I 100% agree with that. That's really cool though. I didn't actually know all that about how we mirror our neurons. That's interesting. That's something I'll have to look
Yeah.
into.
Yeah. And then there's something else called the emotional contagion. So emotional contagion is the ability to catch emotions in others and being able to empathize with that. So if the how he responded with drawdown periods, how he responded with the euphoria of winning trades, what was the response, emotional response? When you see that response in others, that influences your emotion to the same stimulus, the same environment, or the same sort of situation, right? So it's important that you surround yourself with calm, composed individuals who, you know, then they don't get so gassed after losing a winning streak or a big trade. And at the same time, they don't get so emotional and disappointed and angry when they're managing those inevitable losses. So how was when you were, you know, coming up, and what kind of emotional responses did you see in your mentor that you feel that kind of
That I've adopted
helped you in your journey?
So I remember specifically, Gene goes on runs where he doesn't lose for weeks sometimes, and but then he hits slumps where he won't win for a week. And I remember one of the first times that I was really starting to feel like I was getting it, so to speak, and really understanding things. I was watching Gene. I think he was taking a GJ trade or something like that, and I was watching, and he's like, "Yeah, no, this should go here. This should go here." Does everything like he said it was, but then when it gets to his level, he goes short, and I mean, it sits there, doesn't do anything. And for me, that's one of the most uncomfortable moments as a trader when we're ranging, because I could be right, but I could also be wrong, and I'd rather just know and be stopped out. When I'm stopped out really quickly, I almost don't even notice that I took the trade. It's whatever, boom, already forgot it. But when I sit in a range, that's one area that really, really affected me. And so watching Gene sit there in that trade, and he would just go, "All right, guys, so nothing's moving here. So let's go ahead and just go through some other assets real quick while we wait." And so he's not even looking at the chart. He's not even worried about it. It's got his stop loss, got his take profit set, and he's going through other things, teaching, doing lessons. And I was like, "Dude, you're like in 10 pips drawdown right now on like a 15 pip stop. Like, you're not even looking at the charts, man. What if there's something here that tells you it's going to go up and, we're going to lose?" And so I'm sitting there watching this whole time, and he's not even worried about it. And he'll flip back to it. He'll be like, "Yeah, guys, it's not moving. So what we're going to do is we're going to just take half off, and we'll move into something else. If it runs, great. We'll make our money back. But if it stops us out, we're only down, half of what we initially thought." And that right there, when he did that, I was like, "Oh my gosh, he's not even worried about this." He's like, and so he just took half off. Now it's just a tiny little risk that he has on the trade. He's not even worried about it, and he just goes in back into teaching. And so I really try my hardest every day to adopt that. And I think those are the best days that I actually teach, because whenever I'm focused on trade and it's running really good, usually I want to be on that chart and I'm calling what every candle is doing. I'm saying, okay, we want to see an expansion in this candle. This is why. Okay, we don't want to see this return back up this spiral. This is my cap. I want to see it remain below this. This is why. And so I'm teaching, like, reading price action on those days that we're winning. But on the days that we're losing, I don't really want to be in that marketplace. And so what ends up happening is I go more into a Q&A type of session. And instead of worrying so much about the live trade, I try to mimic what Gene did, just like you're saying. And I think that's so crazy. I've never thought about that, but I'll mimic exactly that. And I'll go into other assets, give my bias, give my narrative, give my understanding. And then as people ask questions, I cover concepts. And sometimes the calls last up to 3 hours, 4 hours sometimes. Most of them I try to keep about an hour and a half-ish. But no, that's probably the biggest thing that I took away is when I'm struggling and we get into weeks where it's just consolidating and I'm taking a loss and then I take another loss, I try to compensate that for giving more teaching and doing more conceptual work, because focusing on the trade and hanging on the loss, it's only, like you said, it's only going to teach my students to hang on that loss. So if they see, hopefully if they see me just, okay, not a big deal, half off here, we'll let it run, let's go into teaching, shows that I'm not concerned about the loss, because I know that we're going to have a setup play out. I may lose 3 or 4 in a row, And a lot of people, I think, are afraid to show that and afraid to be like, yeah, man, I took a loss. Because back in the day, I remember, especially being in like IMO, it's very toxic behavior. And people are like, oh, you took a loss, you suck, blah, 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 blah. And it's like, you don't realize that that's part of the game. It's part of doing business. You can't win every time. Just like every business you do with a company isn't going to be a good business deal. You're going to lose out on business deals. You're going to create products as a innovator, and those products are going to flop half the time. You may have, half of them or even less that are successful, but those ones are going to pay you out over time versus the ones that aren't. The ones that aren't don't matter, because you got these ones that are successful. And so if these are successful and they're repeatable, who cares about the few losses, So I think that's probably the biggest thing I took away from Gene, and just being able to be calm and composed while taking a loss and not freaking out. Because I know early in my development, I was a very emotional guy, especially growing up. I was always, the loud guy in class clown. I was always getting in trouble, ISS, out of school suspension. I was always just doing stuff, and I had very short, quick temper. Little things would just set me off. And so that's how I was for the first 2-3 years of trading. And then really understanding things under Gene and getting more comfortable with a particular model and a setup, I calmed down so much, and I would look back at myself and I would go, why are you reacting like that to this? This is not a big deal. And so that and trading consolidations, those are the main things that I took away from Gene. And honestly, ICT too, because we're all students of ICT. That's where we get everything from. But physically seeing that every day on live sessions really it changed the whole game for me. And I try to push that as much as an educator as I can. So
yeah, that's honestly like one of the hardest things is to you can't, honestly, it's so hard. You can't transfer your mindset to somebody else. Like, they have to go through that process. I'm short-tempered, I'm impulsive. So like, I had to really battle that. Do you know what like it's not an easy thing to do, because it requires you to actually like face your demons, essentially, right? Like, that is one of the hardest things to do, and a lot of people just can't do it. So like, I guess going back to, trading being a lonely thing, and now you're saying that your friends are getting into trading, is that only because that they see the success that you're having? Do you know what I mean? Because I have friends that I've tried to get into trading for. I mean, some of the people that got me into trading don't trade really as much as anymore. But now that I have this level of success, I'm trying to get them back into it. And it's just like, they don't have the motivation to like put in the work, because it is a lot of work. It's a lot of work on yourself, first of all. And it's a lot of work in the charts and understanding, right, all the framework, the institutional, how orders are being booked, everything behind that. So like, I guess my question to you is like, how are your friends doing? You know what I mean? Like, are they actually putting in the work? Or are they just kind of like floating, and they hope that the success is just going to find them?
So being realistic, I anticipate most of my friends that do jump on, I guess, the bandwagon of trading, I do expect most of them to not put in the effort needed to actually be successful. I'm really, really excited because I actually got a buddy staying with me right now. And he's been grinding with me for about 6 months now. And he just bought his first prop from challenge. He's been in my group the whole time. He's hopped on all my live calls, all that stuff. And whenever I'm explaining stuff, he's following, So, and that was the main thing, because I would try to, oh, look, it's so easy. And I would try to teach it to my friends, and they would just look up with like, oh my God, this is so much information. And you don't even realize too, sometimes whenever you're teaching, you have a lot that you compute that you're not talking about. So like, if I go and I look at a chart, I'm going to see 100 things, like that, boom, 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 boom. And I'm going to make decisions. I'm not marking it up and going in and looking at every single little detail and stuff. While that can be helpful, and it's definitely helpful for teaching, I don't always think about that, because it's almost second nature. And so you kind of jump ahead, and I think that's the most discouraging part, because you're in here and you're like, oh, it's so easy. And they're blown away, because they're like, there's just no way like I can get all of this information and make these decisions in this amount of time. And so I understand that a bit, but for them being able to at least give the effort, I'm super proud and super happy about that. And you're right, it is because I think they finally see that it's possible to be successful. Because I was with all these guys, back when I was losing money too, and they saw that and they were like, man, you're going crazy, man. I don't know about all this. And I made the mistake of quitting my job a little too early. And so I struggled financially for, too long, really, for what I should have been doing. And so not having a job, they saw me struggling. And I think a lot of that is going to be what they're envisioning whenever they say they want to start trading. They remember my struggle. They remember me, failing and failing and failing these challenges. And I think that's one of the main things that a lot of them will see. But now going into it, because I am successful, because I've gotten funded, because I've gotten a lot of my students funded, I think that I think they see that, and they see that it is a transferable skill. Whether or not the mindset is transferable, like you said, that remains to be seen. I think you can transfer some of it, but at the end of the day, everyone's their own person. They all got their own demons. And if they can't conquer those, then it doesn't matter how much you can teach them. But yeah. I think they'll be successful. At least one or two of them. I know one will. He's over here right now charting up.
Yeah, see, that's the thing, is like a good teacher can tell when a student is willing to put in the work, right? Like they should be. The biggest thing is like ask questions, right? Like if you're not asking questions, like how can you really learn? Do you know what I mean? Like
I say that all the time.
I always put myself out there to the people I'm close to. Like I'm here 24/7. Do you know what I mean? Like
I love this stuff, bro. I'll talk about it all day. Like ask me anything. Come on.
Yeah, exactly. Like, and they think it's like, oh, I don't want to bother you, I don't want to waste your time. But no, like this is my passion. Like if I get a chance to talk to somebody about it, at least it's better than me just sitting inside my office talking to nobody about it, right?
Yes, that is so true. That is exactly true. Oh, yeah, I say that every call.
What do you think is like the biggest hurdle for some of your students, and like what have you noticed that separates like the people that have gotten funded, right, with those that are maybe struggling or maybe will never get funded, right?
See, so that's a really interesting question because
you are guiding them, right? Like you're guiding them through the session. So like essentially, you want 100% of your students to be successful with it, right? But what do you struggle?
I wish. I wish. I see. I
trying to fade you.
Yeah, I try to give, especially the guys that I notice hopping on the calls a lot. I try to give them extra attention, and I'll message them because I see them putting in the work, I see them putting in the effort. So I'll message them, at the end of every month, and I'll be like, hey, what are something that you've learned this month? What's the thing that helped you the most? What are some things you're still struggling with, right? And I try to ask this to the guys because I want to know what it is that I'm saying that's giving them those light bulb moments, right? Because there's so many things that ICT teaches. A lot of people don't really get how to put them together sometimes. And for guys like me and you, who we've put all the pieces together, we've done all the work for that. We're automatically rolling on smooth tracks, right? They're still missing, parts of the track, so they can't continue and get to that next part. And so I try to find out where are those pieces that I put them together that really gives them that light bulb moment where they start to understand whatever concept it is that I'm teaching at that time. And so what I found the most, funny enough, as simple as it is, it's basically looking for taking that 50% off at that 1-to-1, 2-to-1 risk to reward ratio. For me, for all of my students, almost every single one that's gotten funded has messaged me. This right here has completely changed my trading because now I have so much more confidence to hold, and I'm getting these swings, and it's building my confidence in my model. And so I think that's probably the main thing. And the other thing would be just being on a live call and watching me say what, each, candle should unfold like and why. That right there, just understanding how live action should play out in specific times. And this is nothing that I'm creating. This is nothing that's unique to me. It's ICT's concept. And now this is the first year that he's ever really done live trading in front of everyone. So we're seeing him do these concepts live. And I think it's been ICT's biggest addition to his content is him live trading in front of us. And so they've told me, it's the stop loss, and it's understanding, okay, I can keep my stop loss there and I take that 50% off, and I essentially, they eliminate all the emotions that they had associated with that trade. And now it's like, hey man, I can do whatever. And so I would say that's the biggest thing that I've been told has helped. And then just slightly under that would be reading live price action, candle by candle, explaining why things should happen. And when they don't, when I'm wrong, you know, I say, okay, look, if I'm wrong, this is what's going to happen. Right. And it's the same type of concept that ICT talks about, where he's like, you know, like, I'm not calling both sides. I don't want it to get misconstrued. I am wrong in this scenario here if this happens.
Yeah.
But
it's just if
that
then,
happens.
if then statement, right?
Exactly. I try to make that very clear, because I think a lot of YouTubers, they'll go, oh yeah, this is going to happen or this is going to happen, and they'll be like, see, I told you so. And I had a conversation with my buddy about this, and you know, when you see someone do that, you're like, well, no shit, you got it right, man. You called it both ways, you know. But earlier in the call, you mentioned about being able to kind of switch stances and stuff. And I think that right there too is another one of the main things that have helped, because people come in with a bias, predetermined bias, like you should. But if you're wrong on that bias, being hard-headed and being determined that it has to go to that draw or that area, that will destroy your account, because you'll see setups where there are no setups, and you'll see setups that are in fact setups for the opposing liquidity pool. And so being able to
keep stopped out, right?
Yeah, exactly. Understanding like, hey, you know, we shouldn't see this in this candle. If we do see this, I'm wrong in my direction, and we're going to switch stances. And you'll see it, and we'll get in line immediately after that happens. And they'll be like, whoa. I thought we were trying to short, or I thought we were trying to long, or whatever. And so I'm like, well, no, you know, I originally was looking for that, but because of this, and this, I switched my stance. And so a lot of people being able to see those concepts being used in live price action and seeing me be, okay, I'm wrong, let me switch my stance real quick. Even when I'm wrong, boom, I can get a winning trade. And so that right there, along with, you know, the stop loss and the discipline, I think that's what's helped most of my students that have gotten funded get funded. And there are some that, you know, I don't want to say will never get funded, but it's going to be very, very difficult. You know, I was telling you the other day about one of my students, really, really proud of her, because she's been with me for almost 2.5 years. Back when I was in Forex Cartel with Gene, like, she was still studying under me back then. And it was always, you know, oh yeah, Tex, I got you this month. I'll put in the work. And then, you know, your first week would be great, but then the rest of the weeks throughout the month, she's, you know, busy with work, busy with family, doing all these things. And I would tell her, I'd be like, hey, look, you know, you're not putting the work you need to do this. And she would call me and she'd be like, hey, you know, I got this problem. I don't know why I took this trade. I don't know why. And so I worked with her for I had like a 4-hour call with her one day, and we constructed her a model, and we had a very, very detailed risk plan. And part of it was the 50% at take one. I was like, I don't care if you forget about everything else. As long as you are taking 50% off here and you don't move your stop and allow yourself to trust the model, it will play out more often than not. And she tweaked it a little bit herself. She got it into where it fit her personally, which is exactly what I encourage all my students to do, right? But when she got it in there and really, really refined it, she got funded in like 2 weeks. 2 weeks. And she's been with me for years, and she hadn't even gotten close to passing. And she was just going through, I mean, you know, every month, text, I don't know what I'm doing wrong. Text, and every week I'd hammer home the same message. But until you listen to it, you know, you're not gonna see the success from all the hard work you've been putting in. And so when she finally did that, you know, I was posted it everywhere. I was like, y'all say congrats to my girl Frankie, because I mean, she killed it. And now that she's passed that first one, I told her, no matter what happens, right? You've gotten to that point. You've seen that it works. You've seen what you need to do to be successful to pass a challenge. Now you know you can trust that and stick to that. It may if you know, say you lose an account, and this is for anybody, right? Say you lose an account. Say you get funded, and then boom, you immediately lose it. That sucks. But you just saw what you had to do to pass it. Follow that same plan. There's no deviations. You can refine it a little bit more if you want, but you really don't need to. If it was good enough to pass a challenge, it's good enough to make money. And so, because making 10% in a month is not easy for 99% of traders. It's really not. Personally, I shoot for 5% most months, and I end up with more than that sometimes less than that. But I'm not shooting for crazy, profit each month. I want to just be consistent, and I want to
I don't even have like a monthly target. Like I just take whatever the market gives me. Do you know what I mean? Like
and that's honestly even better. That's honestly even better because even when you do have that target, sometimes you're below that target, and it's like, man, it's only 5%. Why haven't I hit 5% this month? And so sometimes you do try to push at the end of the month, which is really the time that you don't want to push, because most of the time you're going to get, well, not a TGIF, but the TGIF on the monthly candle.
Yeah,
so,
exactly. And it's interesting you bring up like the fact that just recommending to take 50% off the position off, because I had a lot of people ask me like, I'm a break-even trader. What do I do to get to being profitable? And like a lot of people don't realize like so many of the traders that are possibly listening that are not profitable right now, you guys are so much closer to profitability than you think. Like it's just about tweaking these small things. And like you were saying, just take 50% off. It's like your greed wants to hold on for more, right?
Yep.
So like as soon as you take that 50% off, and if you reduce your stop, your stop to break even, all of a sudden now you're a profitable trader instead of the market coming back on you, stopping you at break even. Now you have something in your pocket. Your equity curve's trending upwards, right? And it's such a small thing to do, but so many people just struggle with it. You know what I mean?
100%. And I realize too, a lot of people don't even look at it so much as risk to reward. Sometimes it'll help to look at it percentage wise of your account. One of the things that I've found a lot of times, I'm risking either 0.25 or 0.5% of my account on every trade, right? So if I'm not risking any more than 0.5% per trade, I got to look at taking something off the board at 0.5% in profit, because no matter what, if I'm taking off profits, even if it's little chunk by little chunk, there's so many setups that eventually those are going to stack up, and it's going to be 2-3% off of all these little trades that I've taken. And so even if you don't want to look at it as R to R or, risk to reward or whatever, if you want to look at it more from a percentage side, sometimes psychologically that really helps, because you're like, well, dang, how much are people making in bank accounts or investing? Barely anyone is keeping up with 6% inflation. So what makes you think that taking off 0.5% in one day isn't good? You know what I'm saying? If you got $100,000 out and you make $500, take that $500 off the board, take it off, or a piece of it at least. You can let something run, but take a piece of it off, because then you're like, wow, I just made a portion of what someone's looking to make in a whole year. Your bank account's going to give you 2% interest on whatever you have in your savings max. So if you can make 0.5% on one day and do that, say 3 days out of the week, not too much, right? You're at 1.5%. And let's say you take a loss, so you're at 1%. You just made half of what someone's expecting to make in a year in a week.
Yeah.
So the bigger perspective is so key into allowing yourself the time that you really need to develop, because people don't want to take the time. People want to get in and they want to get done. They want to get to the top, as soon as they can.
Yep.
And you can't make that jump without the discipline and the content. I don't want to say content, because I hate that word, but the ability to be okay with smaller amounts of profit.
Yeah, I mean, I've been watching a couple of interviews, and like some of the most profitable traders I've seen in prop, like they're aiming for like a 1-to-1, 1-to-2. You know what I mean? They have a high strike rate, but they're just in there every single day, right? Like you had mentioned, right? 270 trading days, right? If they're peeling off 0.5% to 1% every single day on a 1-to-1, right? That's huge. That's a huge amount of money, like compounded over time. Like, what do you find is like the biggest? I'm sure you have students that have maybe gotten funded and blown accounts, right? Like, what is the biggest issue for them?
Yeah.
They're trying to be greedy. Like, do they go up in profit and then right before the profit split, they just end up blowing it, right?
So what I've had 3 come to mind immediately, right? And one of them, unfortunately, was just due to time circumstances. They had a really bad neck injury, and he's a really cool dude, honestly, a really good trader. And it sucks because he had this injury and he didn't trade for a while on the account. And most prop firms, they require you to take a minimum amount of trades on the account. And I don't think he met that minimum threshold. And when he came back off of bed rest from the hospital, he had lost his funded account, which was really tough. Now that's an extenuating circumstance, but that's another area. Life happens, and you have to be willing to accept that in conjunction with the things that go on in trading, because this is the real world. You can't just sit in front of your computer and expect things to be great 24/7. Like that's not how it works. You're going to run into things in life that are going to mess up your trading or affect your trading. It's going to affect your emotions, your psychological side of things. And I think a lot of the times when these, especially my students, they get funded, they kind of let that psychological side slip a bit, and they get really excited, and they're like, oh my God, I can make real money now. Like finally, after all this time. And turns out, when you do that, you tend to deviate from your trading plan. And as soon as you do that, you get really emotional. And so now you have all these emotions that they're already heightened because you now have live funds, right? This isn't a challenge. This is your account. This is your capital. Now you have all those emotions and you deviate from your trading plan. And now you have no control of your emotions. And so you roller coaster and you go up, you're at extreme highs or you're at extreme lows. And you end up over trading primarily is what happens, or you end up over leveraging. And
I think also too, maybe they're like moving their stops and they're moving their targets. Like if they have like a runner on right now, they're adjusting their profit target to 500 pips further. And then, you know what I mean? Like,
yeah. No, see, I tried to, that's another thing that I talk about a lot is, be content with not reaching your target. Let it reach your target for analysis purposes and build your ego and build your confidence with that, because that's great. Like the better you are at meeting your target, cool. Later on, you can trust that setup to run all the way. But for now, get those low-hanging fruit entries and exits that ICT talks about. You don't have to get the highs and the lows. Understand it's okay to get just a bulk of the range in the middle, even if it's half of the range in the middle. If it's a 100 pip range, you're getting 50 pips. Be content with that take profit and understand, hey, look, maybe we're in low probability conditions. Maybe we're on a Wednesday when we're expecting bearishness and we're at the high of the week, so we might see a reversal. All these little things, like understand when you are probable or when it's probable to see it reverse on you, and be content going out early. And if you gotta accept less profits, that's okay, because it's profits. Like
I think some people are really underestimating the fact that you don't need major crazy home runs to really do well in trading. I don't aim for 1 to 10 risk reward. Like if you're aiming for like a 1 to 10 every single day, like you're gonna lose on a lot of trades, and you have to be comfortable with those losses. Like I'm okay with just doing a 1 to 2, 1 to 3, and scaling out. When it's like 1 to 1.5, 1 to 2. I'm not aiming for because you have to think about it, right? The average daily range on a specific asset, right? Like let's just take euro dollar for example. The average daily range might be 100 pips. By the time I get to the chart in New York, it might have already moved 35,
70.
40 pips. So I only have 60 pips left in the range. There's nothing wrong with me just doing a 20 pip stop and a 40 pip take profit, because now the daily range is maxed out. Do you know what I mean?
That's beautiful. That's beautiful. Like I try to tell people that all the time, because NASDAQ expands sometimes 300 pips in a day, 400 pips in a day, like crazy. And there's mornings where we wake up and the group's blowing up. Hey, we getting on a call text, what's going on? And I'm like, we can get on it, but we might not find anything. It's already moved 200 pips. Like, exactly. we kind of missed the move if we were going to get in something, and you gotta be okay with that. So I 100% agree with you. I think that 1 to 2 is the sweet spot, really, because you're getting in, you get an opportunity no matter what, pretty much, to take out some partials, because it's almost always going to run 1 to 1, 1 to 2. And then if it runs further, you got a nice little runner. You're making a little extra bread today. You can be happy. You got a cherry on top. Maybe you go out and get a drink or something, or maybe you get yourself some lunch with it. But like you don't gotta stress about getting those 1 to 10s. It's counterintuitive to look for those long-term targets, especially if you're trading on the 15-minute, 1 minute, 5 minute, all those lower time frames, because you're trying to press like a daily high into a 5-minute model, maybe, right? And if you're entering on the 5 minute, one of the things ICT always talks about is you want to find 5 minute or 1 minute take profits. You don't want to be looking to take profit at a daily level when you're entering on a 5 minute level, because you don't know if there's going to be a 15-minute pullback that's going to stop you out. So I 100% agree with you there. I think that 1 to 2 is gorgeous. That's what I like.
Yeah, so we're getting a little late. I know Rodrigo's gonna run, so I'm gonna just take like a little quick interlude break, and then when we come back, we'll answer some of the questions in the chat. David's blowing it up right now, so we'll get to him. So stick with us, guys. We'll be right back.
All right.
All right, back at it. So let's run through some of these questions real quick.
Yeah,
So
I think
a lot is asking how many pips must my stop loss comprise approximately. So honestly, that comes down to like your time frame. You can't be using like a 20 pip stop if you're trading a daily candle. I mean, you could if you get a really decent area, but to me, it's based on the time frame. Honestly,
pushing your luck trying to get in with a 20-pip stop daily.
yeah. Like for me, I think a 10 pip stop on the 5 minute is pretty good. Like 15, 25 pips on the 15 minute.
I try to never
You
go below
go up.
10.
Yeah. Like hourly, it's like a 50 pip stop loss. I mean, yeah, on the indices, right? Like a 10 pip stop loss is quite tight. Again, if there's a 300 pip daily range, that's kind of high. I mean, that's kind of tight.
Exactly. No, I agree. I think managing that stop, the main thing you want to focus on is the stop at a logical level. You can have all the rules in the world for how much or how big you want your stop loss to be, but if your stop loss isn't being placed at a logical level, then it doesn't make sense where it's at. Who cares if you have a 10 or 20 pip stop at, or stop loss, but you have S&T on a particular high that is what shouldn't be ran out, and so it goes all the way up close to it but doesn't run out that high. Then where should your stop have been? It should have been an extra 5-10 pips above that. So it really depends on the setup you're taking and your model too.
Yeah,
Not
like I
just
always just try and find the invalidation level first and then calculate my
exactly.
stop loss based off of that. But if that invalidation level, let's say if I'm trading the 15 minute and that invalidation level is now 50 pips, like I'm just not even going to take the trade, right? Because now the risk.
Exactly. You're going to wait for it to return to either a deeper premium or a deeper discount.
Yeah,
And if it doesn't return to that level, then that's one of those days where you're like, okay, guys, well, let's watch this run for us. We'll do analysis on it. We'll study the price action, but we're not going to take a trade. And
exactly.
I think too, those days are really good because you get a really good feel of the market structure. And you actually get, I think, the best in terms of tape reading sessions you can get because you're not in the trade. So you're not hoping for it to go one way or the other. You're just in there watching it. So that's definitely a good question.
So 10 bands trading asks, you've mentioned here that the actual edge that we need is the mental edge, not technical analysis mostly. And yeah, for me, honestly, the mental edge is being comfortable with uncertainty and being comfortable taking losses. Like that is, in my opinion, the biggest mental edge that most profitable traders have that unprofitable traders don't have. Right? Unprofitable traders are greedy, they're fearful, and yeah, they're just not comfortable with uncertainty, so they're doing things outside their plan. And the best traders I know have extreme confidence in what they're trying to do.
Yeah.
Right?
And what a really good question to ask for you, Tim Vance, is, have you ever gotten into a trade and then you have your stop loss set and you're looking at it and maybe it's not moving or whatever, and so it runs to one risk reward and then you close out everything. Why do you close out everything at 1-to-1? Well, obviously it's because you didn't trust your setup. Well, what made you not trust your setup? Well, you're not confident in it. You don't have probably the proper model for you if you're not trusting your own model. You know what I'm saying? And how many times have you gotten into a trade where you do take off that portion and then it runs 100 pips without you? You know what I'm saying? And then how many times do you get into a trade and then hold it because you're like, hey, last time it went 100 pips, and then it comes back and stops you out at a full stop. So the psychological aspect of trusting the setup and taking off that partial is what allows you to consistently trust your setup going long term. And what eventually will happen is you'll understand when it will run further and you'll understand when it won't run further. And so what is said, instead of taking off that 1-to-2 in the future or 1-to-1 in the future, you can expand that and start taking off things at 1-to-3 or 1-to-4 when you know those days are going to run longer. But if you don't have that mindset that says, hey, I got to be comfortable paying the trader because I don't know if it's going to continue in the beginning, you're not going to get to that developmental stage where you can allow it to run and trust it to run, because you're never going to build that trust in the first place.
That, to me, that comes down to experience too. Like I had to experience a lot of trades running like 200, 250 pips in my direction. I didn't take anything off and I watched it all come back on me. Do you know what I mean? Like that is, yeah, it's a hard thing to master, but you kind of have to just go through on your own and figure out what you're comfortable with. In my opinion, if you got a huge runner, you got to take something off, because a lot of times when you get that massive expansion, right, like it can easily just collapse back on you, right?
Especially like the volatile NASDAQ. That thing will run 100 pips in the opposite direction real quick if you're not careful. So definitely just paying the trader. And anyone who's saying, it doesn't make sense to take off partials because it's less profits, that's not really what you should be that's not really what you should be focused on. I think too many people focus on their win rate before they should be focusing on their win rate. I'm not saying win rate's not important, but if you can't manage a trade properly and you can't trust the setup properly, then it doesn't really matter what your win rate is, because you're not going to have a good one. You're not going to have a good one at all, because every single time you get into something, you're going to be stressed. It's going to be mentally and physically draining. And you're probably going to get the days where you're just like, is this even right for me? Is trading even, what I should be doing? Because I keep taking these losses and I'm right on my direction. You know what I'm saying? But because
we're not saying like, yeah, this is the only way to do it, right? There's a reason why 95% of people cannot get to a payout. And that's because that they're aiming for home runs all the time, right? If you just aim for the low-hanging fruit, so many more people will be profitable. It's not to say that you can't eventually aim for that. It's just not many people could do it, right? Like I'm not even doing that. Like I'm doing 1-2, 1-3, and I'm doing quite well with the prop firms. Like I wouldn't like argue that I'm not doing well with them. I'm not trying to hit crazy home runs. I'm just trying to get more capital, because at the end of the day, if I can do 2% a month and I'm doing more than what 95% of you guys are doing, I don't care about the huge percentage gains. Right? Like I'm just going for those base hits essentially.
And when you start stacking that capital, 5% on $2 million is a lot different than 5% on 100K.
Yeah, exactly. So, and at the end of the day, it's still the same trades that I'm taking, right? So you want to just get more capital. You want to just try and turn your 1-to-3 system into a 1-to-9 overnight.
And it's really cool. It's really cool if you're really good at hitting, 1-to-4s. Congratulations, that's really awesome. All the hats off to you. But I don't think you can go in and teach that to people with any type of proficiency or profitability.
Yeah,
I think that's too difficult, especially for new traders.
For new traders, exactly. And I think there's a reason why ICT is like 25 handles or whatever, 5 handles, even 5 handles. Just start small and then build on that. Like you can't just get somebody that's unprofitable to start all of a sudden banging out 1-to-4s on a regular basis, right? Because again, like the daily range, it's not offering you that. So 10 bands again asks also if one of you guys could give some advice on efficient backtest method. So like I typically use just like Forex tester. I mean there's a bunch of different things that you could do out there. And honestly, when I like was backtesting, it was me just like plotting out instruments on a chart. Like I didn't even have to hit replay to watch it paint live. Like it was just me going back in time and plotting that fair value gap and extending it out in time and see how price reacted around that level, right? I mean, there's a bunch of different things that you could do.
I just always struggled with backtesting. Backtesting was one of the few areas that I disagree with a lot of traders on. I never really found success in backtesting.
No, I agree with you that I agree with you there because I never really backtested either.
Yeah, it didn't make much sense to me because the way the candles are already formed and the way they form on like the replay chart and everything, it's not the same as watching it form live. And so what I always tell my guys, I'm like, hey, the best thing you can do is go in with no funds, no nothing, and just try and study and predict how price should react at levels. And then one thing that I do backtest would be, okay, how do we draw to specific levels? Ideally, session highs and lows, days highs and lows, and week high and lows. Right? What are the areas that we're drawing to, and what's the reactions we get out of those areas on specific days? Right. So if we trade into a new week opening gap on Monday, what's the reaction we normally get? If we trade into a new week opening gap on Fridays or Wednesdays when I'm expecting high of the week or low of the week, right? What are the reactions we're getting? Those things I think are very easy to backtest because you can go back and just see, okay, this is how it's reacted, and you get the knowledge of essentially past price action in that sense, but you're not watching it live. So it's still not as effective as just watching live price action and tape reading.
Yeah, something that you can't replace is like a live market condition because the news event's going to be different. Like the climate, the economic climate that we're in is going to be different. Like you can't take a backtested method into a live market and just say like, all right, this is how it's going to perform. Right? Like that's why some systems fail eventually because the market environment changes and now they can't adjust. So in my opinion, backtesting was never that useful for me. It was more about the forward testing.
I agree with that 100%. 100%.
So we just read that one.
Let's get one of David's in here. David's really
okay.
Really
Yeah, we just touched on this, like that's BS if your system is more profitable letting it run to 2R or more. Well, that's the thing is like 95% of you guys don't have a profitable system, so you can't really say that this is what you should be doing, right? Like I don't know what the percentage rate is of people that make it a payout, but it's literally like
3%, I think.
It's like 3% of the accounts, right? So
yeah,
out of 100,000 out of like 100,000 accounts, there's like 300 people making it a payout.
Yeah, and that's great too, David. If you're hitting 2R like nothing, that's great. You know what I'm saying? But tell me you haven't stayed in a trade longer than you wanted to and gotten stopped out. And if you're saying you haven't, that's bullshit because we've all done it. I know for a fact.
It happens to us.
Yeah, it's a part of the process, and so I think that trying to say that taking profits is not profitable is bullshit. I'm pretty sure that's bullshit because no matter what, if you're making profits, you're making profits. You're better than 95% of the people just at that point.
Yeah.
Just at that point. Break even is better than 90% of the people on this planet. So if you're better than 90% of the people on this planet, it's not going to take too much to start elevating that if you go step by step. But if you try to jump to 4 or 5 risk to reward and you don't take anything off in between, and you don't build the trust in your model, you're not going to be successful long term, which is what we want to do in this business. We don't want to be in here for a day or a week or a month or a year. We want to be in here for the next 20 years, and we want to continuously build our capital and build our equity.
So I actually follow Tom Dante. I don't know if you know who that is. He's like a legend in the prop industry. This guy was trading next to people that were making like 50 million a year. And I watch him trade sometimes, and this guy's literally okay with just taking a 0.8R. He's not even doing 1-to-1. He's just doing 0.8R. You know what I mean?
I think I've seen that. And he takes a bunch of them.
That's what I mean. He's just doing a bunch of them. His strike rate's probably extremely high on them. And then he gets the occasional 1-to-3, 1-to-4, 1-to-5s. But he's not going for them every single day. Like if you're trying to do that every single day, you're gonna have a lot of losses, right?
Yep.
And it's way easier to get a 1-to-1, 1-to-2 than it is to get a 1-to-4 on a daily basis, right? Because again,
100%.
the daily range, unless you're up from midnight till London close, which that's definitely not something that I recommend people do. Let's see. Yeah, knowing your model's win rate and strike rate helps with emotions. Yeah, it does at times, but even just having that data, right? It's a whole different thing to be in a trade and managing those emotions, right? That's where the mental edge comes into play. Like,
Yep.
just knowing your win rate is not enough, honestly.
I would agree. I would agree. And I think, honestly, if you know, too, that you're going to win 2 out of every 3 trades, that does help with your emotion a lot. But I think that also, like you said, taking those little victories and building on them, because eventually those little victories will become bigger and bigger and bigger and bigger. And eventually, once you do have enough capital, after you've been so consistent for such a long period, those 0.5%, 1%, 2% trades, they're going to be monstrous in terms of actual like equity. It's going to be, hundreds of thousands of dollars eventually.
Yep. So Peter's asking, how can I join his mentorship? I think his link's below. I'm pretty sure he's got it on his Twitter profile.
Let's say I got on my Twitter. I have a website. If you guys want to look up the website, it's the Texas Trading Syndicate. So you just look that up. It's the first website. You'll see my logo and everything. It's the all-seeing eye, and then you scroll down. It's got the links and everything you need. I actually was probably just ran some discounts and stuff like that. But where's the guy? Someone said I needed to get him in the group. Or was it Rodrigo that said that?
Oh, maybe, yeah. Maybe
I think it was Rodrigo. Yeah.
I guess it's between you and Gene. You guys got to fight for him. So Isaac's saying, yeah, they always want the blueprint until you give it to them and they find out they actually have to put in work. Yeah, this goes back to like talking about our friends trying to get into it. Yeah, it is a lot of work. Like if you want to it's the hardest way to make easy money. But if you want to make easy money, it doesn't just.
It's the easiest way to make money in the world, I think. It's not the easiest way to start out, but what good thing is super easy that you just automatically know how to do? It's a skill just like anything else. And
listen, the business model is like zero overhead, right? And unlimited earning potential. So like,
unlimited.
Do you think that comes easy, right? I don't think it does. Otherwise, everybody would be out here just slaying it,
Exactly. And one thing I always tell everyone too, don't my mentorship is pretty small. I kept it under 30 people for over 2 years, and I just recently opened it up to where I can allow more people now. I think we're at like 65 or 66 right now. But I don't just get on the calls and go, okay, we're gonna buy here. All right, guys, that was a great trade. Close out. We're good. See you guys later. I don't do that. Right? I get on the calls primarily to educate. If we have a setup that happens to form, I give it out, but I'm primarily focused on giving you my bias, telling you what areas to look for entries. That way you can use whatever model, whether you trade order blocks, breakers, anything like that, right? I don't want to force you guys into a model, right? That's not my job. That's one of the things that I picked up from ICT. I don't want to force you guys into trading NASDAQ or trading Euro or trading anything in particular. That's why I don't try to give setups out as much as I should, really. I would rather get in here, tell you what my narrative is on currencies, commodities, equities, bonds. And then once I have my narrative built out for all of that, when the people that ask questions in the group, I'll go into that asset that they're looking at and I'll be like, okay, well, this is what I'm looking at. This looks like the most logical draw. Based on your model, you could have entries here, 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 right? And then I let them do the work. I let the guys do the work. And then eventually what happens is when I get on the calls, I'll be, okay, I'm bullish because of this. You guys already know that. What should I be looking for, right? And then I'll have the chat blow up. They tell me what we're looking for. It's more of that type of environment instead of the environment where you get on, everyone just shuts up and sits there and watches you,
essentially spoon feeding them, right?
Yeah, exactly. And if ICT spoon fed me, I don't think I would be as good of a trader I am, because I would just be waiting for his next step that he's going to give me, because I don't even need to learn anything. I could just take some profits off.
No, it's interesting you bring that up, because I was doing that for a long time. Like when he was doing his weekly commentaries, it's like I was so lost. I just couldn't fathom just trading a live market without his narrative, right? But then I realized like sometimes he gets the narrative wrong, right? So then I was just like, screw this. I'm just going to isolate myself and learn how to do this on my own. That way, if something does happen to him, I'm just completely free and clear. I can do the analysis on my own. I can make my own decisions. And that's really the difference between profitable traders and unprofitable traders. Is like you have to be able to make your own decisions at the end of the day, right?
Yeah. And I try to, one of the biggest things I always try to get my students to do is keep your privacy. A lot of people, that's not talked enough about, I think, in the trading industry. a lot of people, they want to go out and they want to flash their profit screens, and they want to show all the blue trades that they got, and they want to talk about, all the money that they're making. And I think that's one of the biggest mistakes, because who cares if someone who's been funded and has been trading for 5 years is making $1 million, right? Who cares? That has no bearing or effect on you, right? What you need to focus on is, can they do it live, right? Can they sit in front of the charts, tell you when and why and where things should happen? And then can they do that consistently, right?
Yeah.
Those are the questions that people should be so focused on. And when I tell people in my group, they'll post little blue charts and stuff, and I'll delete that. That's not what we're about, because anyone can look at a thing and say, oh, wow, okay, cool, you made a lot of money. That doesn't teach anything. That doesn't help anybody else out. And I've really, really tried to push most of my students, when they get funded, cool, share your certificate. Don't share your results. Don't share your entries. You keep your stuff on your own, right? And you build your capital, you build your model, you build everything that you've been working on so hard for. Don't flash it and try to be cool and fancy, because what's going to end up happening is you're going to start taking on water. I always use this analogy of a boat. Use it for everything, really. If you're in a boat and you're in the middle of the ocean and you're floating, you're doing great, right? You're headed to your destination, which in this case would be, getting funded, or maybe making, whatever amount you want to make on a funded account. You're on your boat and you're going there. You're going to get there when you get there, right? Whether there's wind blowing, pushing you faster and you got some good trades, or there's wind blowing against you and you got to take the sails up and you got to just coast, right? Whatever it is, you're going to get there. But as soon as you start letting water into the boat, what's going to happen to you? You're going to sink, right? Mm-hmm. So when you let those outside opinions and you let those outside narratives and everything come into your trading and come into your trading plan, your boat's going to sink and you're going to lose your account. And I don't think that's talked enough about, honestly.
No, I agree. I mean, honestly, if you're just talking pips, like if I'm making pips, who cares? Because it's infinitely scalable either way. Like exactly. You could be making less, you could be making more, but we're all taking the same trade, right? It's at the end of the day, it's how you size in the trade, and that shows real skill, I think. Because somebody that's making 500 pips a week is doing way better than the guy that's doing 100 pips a week. Even though the guy that's doing 100 pips a week might be doing 100K, the guy that's doing 500 pips might be making $500. But the guy that's has 500 pips probably has more skill than the guy that's making more money. So in my opinion,
and he's going to be able to scale that.
Exactly.
He's going to be able to scale it, because the things stay the same no matter how much money you're managing.
Mm-hmm.
You just get a little bit more content, I think, over time with the amount that you're reaching for. Because it used to be, I want to see, can I capture 200, 300 pips minimum a week? Mm-hmm. And then now I'm like, man, I get 100 pips, 150 pips on really, really easy, quick, fast in and out trades. I would rather do that. I'd rather get in and get out and just know exactly what I'm looking for.
Yeah. So I say this, like, if I have 5 days of trading and I can hit my essential target on Tuesday, I'm not trading for the rest of the week. I don't care. I could do whatever else I want with my life. Why would I bring on water, right? Like I'm bringing on stress into my situation to try and hit it out of the park, right? Like I'm trying to make my trading week as short as possible, because when I'm putting risk on in the markets, it's very uncomfortable for me. I don't think anybody could say that they're 100% comfortable with risk.
I agree. And if they're saying that, they either know something I don't, or they're lying.
Exactly. So Rodrigo, we got a question here for you. Where can I read about the neuro concept?
Oh yeah, I'd like to know that too.
I know a great friend that can help you. His name's Google. Just you'll find plenty of information from Google.
All right, nice. All right, what else we got here? David's asking, what would you say a beginner ICT student should start with? I'm not a beginner, and I would say OTE is the best. Honestly, I always refer people back to the core content, because the core content is literally going to have everything you need, and it's going to take you more than a year to get through it, right? Because it's 12 months of content. Yeah. I don't think anybody in here, myself included, can actually go through all that. It's like reading a book, right? Like I can't go through that and comprehend it all, right? So I actually have to sit down and go. I've been through that content at least 4 times, right? And every single time I've gone through it, I've picked something new up. So like that,
I'm still learning stuff from month 5.
yeah, exactly. In my opinion, that's the best series for me, like that I would start with and stick with, because I haven't even looked at the 2022 mentorship. I haven't looked at any of the silver bullet models, none of that. Just all core content.
I recently got into the silver bullet, and I think the silver bullet is fantastic. I mean, the level of, I literally moved away from my personal model into the silver bullet like the last 2 weeks because it's just been so stinking easy. But it's so easy because I've gone through and I have a base knowledge of all that content.
Right.
I don't think no matter what ICT puts on his YouTube.
Wait,
You
so
know,
does that actually work on Forex too, or no?
Oh yeah.
Okay.
Oh yeah. It works
Yeah, I haven't even
works on
looked into
Forex. Oh dude, man, just take a few days, mark up essentially 950 to 1010. Or if you want to go into London session is the best for currencies. You go and you mark up that 150 to 210 period. Look for a run on liquidity. As soon as you see a run on liquidity, you want to see displacement to the opposite side. You should already have your narrative already kind of drawn out. As soon as you see that displacement to the other side and the creation of a fair value gap, it's like it's butter, man. You just you get in and it just runs for you. It's so nice. Last 2 days has been a little choppy, but other than that, I mean, I've had zero issues trading silver bullet, and it's like I said, it's been stupid easy. I even moved away from my personal model to start trading it.
Yeah, well, there's nothing wrong with that because you have your personal model, you've built up the processes and the routines. You've you've mastered it, right? Moving to a different model, there's nothing wrong with that. In fact, as a trader, it's important to have different tools and different weapons in your arsenal, right? Because there's times when your model might not be favorable for whatever reason.
Exactly.
So it's important to be diversified. So as a business, you have your strategy, right? This is one of the products. It creates cash flow in the business. But you got to master that that product. You got to master that strategy so you understand it when it performs well, when it's just like any product. Some products, for example, if you're selling winter coats, you know, there's a season to that they can sell really well and they create good cash flow. Whereas, you know, a swimming cap, you know, that's not going to really perform well in the winter. So you want to sell that more in the summertime. So it's important to have, you know, as a business, different strategies that perform under different conditions. And I mean, the way you describe the silver bullet, it's almost that sort of excitement again, and that excitement, that challenge of trading something new. It is good for performance because it keeps you on your toes, as they say, right? Because if you become too complacent with what you do,
I think as long as you have the foundations in place, right? Like you understand risk management, you understand your just like your mental edge, et cetera, et cetera. Like,
yeah, I'm really not changing too much. You know, I'm not changing too much. It's I essentially just trade a little like 30 minutes later in the day than I normally have been. Normally I was trading that 9:30 range, but you know, he started talking about, I noticed that lately I was getting chopped up a bit, and I was like, you know, that's kind of weird, and we're moving into kind of a tighter range on NASDAQ. So I was like, you know what, let me take a look at the silver bullet thing. And sure enough, I mean, it got me like 4 or 5 wins right off the bat in a row. And what's funny is, you know, I kind of use it in conjunction with my model for sure, but you know, it's its own new thing. It's something that ICT taught. Now, I will say the excitement part can be a little dangerous because like there's been, I think, a day where I knew I shouldn't have gotten in, but I'm like, hey, it's worked every day so far. Let me just try it out. And I actually took a loss. I think it was Friday, either Friday, like last Friday or something along those lines. I took a loss about 0.5%. And it was just, I didn't even have the setup fully there. It was just me looking at the time, looking at something that looked similar to the setup. And I was like, you know what, let me give it a shot to see if it works. So I think the excitement a little bit kind of got to me there, but overall I have the discipline to get back in line with, you know, what are my risk parameters? What is my normal risk tolerance for my model, my personal model, right? And how can I bring that into the silver bullet? So
yeah, I see a lot of people just take that loss and keep adding in and try and make it work, right? They're trying to make the silver bullet model work for them on a day where the edge is not there.
Yeah, and there's going to be days where no matter what your model is, it's just not there for you. And there's going to be days where maybe it is there for you and you just have the wrong direction. Like it happens. It happens to me, and I consider myself honestly one of the best tape readers that I know besides, you know, Gene and ICT. I think if I got stacked up against anybody, I could sit there and call the market just as good as anybody. And
I would agree.
You know, with all that, I still am going to take losses, and I got to be okay with that because otherwise I need to get out of this business. Yeah. I tell that to all my students. If you're not okay, if you're not comfortable taking a loss, and you can't just, you know, shrug it off, be like, you know what, I was wrong. let me figure out what I did wrong and how I can do it better next time. If you can't just simply do that, you're not going to be trading very long, in my opinion.
Mm-hmm. Yeah, so Max is saying, are there any particular days you opt out of the market, like Mondays? Me personally, like I'm trying to make my trading week as short as possible. So essentially, it almost means me cutting out Mondays and Fridays at times. Like I'm, it's essentially like a 3-day work week: Tuesday, Wednesday, Thursday. But yeah, I navigate based on the economic calendar, right? If there's a really high impact news event coming up like CPI on a Tuesday or something, or FOMC, I'm usually trying to wait for that to, the dust to settle, and then I'll position myself in the market. So I do, yeah, use the economic calendar. I'm sure you probably would say the same thing, right?
Yeah, I would say I use the economic calendar a lot. Sometimes, like if I just see no news on a day, so there's no volatility injections. A lot of those days, I'll move today's I'll move a Tuesday call to a Friday call or something like that,
Yep,
because I don't
exactly.
want to be trying to force something when there's nothing going on in the marketplace. And then it's the same thing, and ICT I'm sure has taught every single day you shouldn't have traded, but that's a lot. You got to go through and make a list. You know what I'm saying? But like post FOMC AM session, post AM sessions for NFP, right? Mondays after particular closings of previous weeks. There's so many little things like that you'll pick up on over time, but all of it still revolves around the economic calendar for sure.
Yeah, I've lost so much money trying to trade on like days where it's only yellow news, right? Like the market's
Yeah,
literally just in a Z-day
back and forth.
profile and just back and forth, just nonstop. You know what I mean? Like there's scalps in
100%.
there, but if you're not nimble enough and you're trying to hold for a large move, yeah, you're gonna get killed.
Yeah, sometimes I try to be a little fancy and I'll go in and I'll really mess up a range every now and then and scalp it like crazy. But
Mhm.
most days I'm not doing that. Specifically, I'm not doing that on a call with 40 students that are trying to learn how to trade. You know what I'm saying? It's not something that I'm going to be wanting to teach or going to be wanting to show like, oh hey, yeah, this is a good thing to do, because really
Mm.
that for me, I'm doing those mostly on days where I have a pretty confident narrative what price is kind of bouncing between, usually like 2 new week opening gaps or something like that. But if it's not something that that I'm willing to sit there on the call for you and show you how to do that all the time, why do you think you should be trying to do that, right? You want to stay out of those days as much as possible, really. It's just, I think one of the things that I've noticed is I have a very, very particular drive for perfection in this and knowledge in this, and the perfection sometimes bites me in the ass, but the knowledge is what kind of keeps me going, because no matter what, even if after I take losses, I'll understand more after I do, and I'll be able to implement that more in my strategy. Understand, okay, I've seen this before. This does work or this doesn't work. So I think too, even trading on days that the economic calendar might suggest no trading on, every now and then there are moves that occur. I think the best bet is to stay away from them if you want consistency, especially as a new trader. But once you really get into the part of your trading where you're like, hey, I'm consistently winning, let's see how far I can push this skill. Now, that's not something you have to do, but I want to be the best at this, right? That's my goal. I want to go into, that's my end goal in this, is I want to go into Robin's World Cup and I want to absolutely demolish it.
Mhm.
That's my goal, my end goal with this. And so the best way I can do that is to gain every bit of knowledge I can over the next however long it takes me, 5 years, until I feel completely apt and ready to destroy whoever it is that I got to face in the Robin's World Cup.
Nice.
That's where I'm going.
Nice. So
Let's
if you
go.
had to choose a trader that you could spend a day with, who would that be and what would you ask them?
Well, we're gonna exclude ICT, because I think
Yeah.
if anyone had to pick, it'd have to be ICT. Just the 30 years amount of knowledge that he's at, everything that he shared, that's all over the place now. There's so much knowledge there. Gene is another guy. I'd got to say I'd love to fly out to Dubai or something and just hang out with him all day and watch charts or do something like that. But I don't know, man. If it's not ICT, it's really hard to pick
So if
someone in
ICT
particular.
walked into your office right now and it says, right, let's get to work.
Oh man, I would be like a kid in a candy store.
what would you ask him?
I would honestly probably, I don't know if you guys have seen this call he did, I think yesterday. He goes through the entire 24 hours of a daily range, and he tells you what each time frame with like during that day what it should be doing. And I think if I had to pick one thing for him to do, I wouldn't ask him about any type of patterns or nothing like that. It would be run me through a 1 minute candle with time slots on every time frame that you look at of like a whole day. And then I would want to do that for like a weekly candle, right? So I'd have a weekly candle, everything framed on it. And then I'd want to go down into essentially the 1 minute with each day's levels and each session's levels marked up and each time zones that he's looking at marked up. And I would want him to run it through me and literally just explain it to me like he would on one of his live sessions where he's just like, all right, we got 6 hours, let's say, to get in here and do this. 6 hours, I want him to describe everything that's going on in the marketplace, why it's happening. Because if I get the why, game over, easy. Because that's really what changed my trading is understanding, orders are being paired here with these orders, and they're using this signature and price, which is area of interbank order flow, fair value gap, BISI, SIBI, whatever, right? Which is the reason why the algorithm is repricing to that level. And then if I know this is still the draw, it doesn't matter that this thing came back 89% of the freaking range or whatever, right? The narrative is still higher. So getting him to explain the times of everything and the precise levels that he looks at, I think that would probably be what I talk to him. And I'd probably also ask him about some things in regards to the central bank dealers range, because I really feel like there's something a lot more to do with the central bank dealers range. And I think you can also use the PM session more than likely in a similar manner as the central bank dealers range for the next day. Because he talks about the previous day, 1:30 to 4 p.m. Being used as a range high, range low as essentially significant levels in the next day, particularly on the NASDAQ. And so if you're using that, you also use the Asian range in currencies the same way, right? If you're above Asian range high on a bearish day, you're likely in a good position for high probability shorts, right? And vice versa. So if you're going to look at that with the NASDAQ, if all these things are fractal and the algorithm really is the same, that means that you have these same things that occur in the NASDAQ, in commodities, in bonds. And so I think that would be, if it wasn't the first question, that would be the second question that I would ask him.
These poor Asian session traders, man, are always losing money.
Oh, dude, always. Man, I feel so bad for him.
So I think we're going to wrap it up here in a little bit. Let's just answer one more question. So Blake is asking, how far on drawdown do you go before you reduce your risk on live accounts? For me, on my funded accounts, like if I go into like a 2 or 3 trade losing streak, I'll try and size down. Just because if you're looking at the equity curve, right, if you go 2, 3 losing trades, like it's going to start pointing downwards. Like you want to just build up a couple wins and get the equity curve pointing up again, build your confidence again. And then you can, size back up to your initial size. Like how do you manage your drawdown periods?
I do. I'm pretty similar to that. So what I found to be most successful for me personally is just when you go in and you say like you're saying 2 or 3 losses in a row, you're down, let's say 1.5%, right? So you're at 0.5% per trade. I'll just go in, half my risk, because eventually every time you half your risk, your equity curve is going to go flatten out. And you may still be taking loss after loss, but it's going to be going like this, not like this.
Yeah.
So as you're going, as long as you can keep that equity curve from diving for that stop loss, I think you're okay, because eventually you're going to get into the market's going to make another shift. It's going to get into a point where it's moving one direction. And once it does, you'll be able to get into those trades and get into those moves, and you'll be able to hold on those type of trades versus the trades where you're trying to scout, 30, 40 pips. You'll be able to actually take some and hold them for 50, 80, 100 pips. And that's going to bring your equity curve up so much faster than trying to bet double what you did whenever you lost. Like
the martingale,
it seems counterintuitive to half risk until you get to a point where you start seeing the market unfold in the direction that you're expecting. So that's for sure what I would recommend is having. And I'd also say once the market does shift into your direction and it is moving in a straight line essentially, at that point your model is going to be so much more efficient and you're going to go from taking a bunch of losses to taking a bunch of wins. So I also want to say, after you get back to break even, don't try to jump up your risk because now you're winning trades either. right? You still want to keep it at your 0.5% or whatever it is that you originally started. You never want to try and go, okay, well, now I'm back in profit, so I can risk 2% on this trade. No, because you're just going to give it all back. Exactly. And maybe you don't on that trade and you get lucky, but there's going to be a time in the market where you go in with too much risk and it bites you.
No, I like how you made it visual, right? Like a lot of people are not thinking about their equity curve like that. They're thinking, I'm in drawdown, I need to get out of it right now. You know what I mean? And you really don't need to do that, especially with some of these firms that have no time limits. It's like, why are you even trying to press it that hard?
Yeah.
So I guess before we close, if you had to give all the viewers, what's your biggest advice to getting funded and keeping a funded account, what would it be?
Sticking to a risk management plan, because like I said, I failed personally at least 12 challenges. 12 challenges I failed. And I'm not afraid to admit that, because I've gotten past that point in my trading. But in all of those instances, what I did was expand my trading outside of what my original parameters were. So I either moved my stop loss, or I took a trade that I shouldn't have, or I did something that was not in line with my risk management system. And when I did that, I became emotional, and the emotions would tank my account every time. And so if you can stay within those risk parameters, and that you're going to have a 30 to 40% win percentage, which is not hard to do, right? Especially if you're hopping on live calls with someone like Jade or me or whoever, you'll be profitable, but it's going to take time. So staying inside those risk parameters, not going out of that, it'll help with the emotions. It'll help with trusting your setups. It'll help with everything. But as soon as you expand outside of that, you're just screwing yourself over, really.
Exactly. So I give you thanks again, Bailey, for hopping on, spending this time with us. We dropped so many gems, man. If you want to find Tex, links in the description. I'm pretty sure you could reach his mentorship through there. So we'll have to hop on it again another time, man. It was such a pleasure having you on. Before we go, though, Rodrigo is going to be hosting Mindset Mondays this coming Monday with an all-female cast. We've got Anna from the Funded Trader. I'm sure some of you guys already know who she is. She does all the interviews and everything. Madison, Mads the Trader, Katie Rose, and Elise, if she can make it. So that'll be on Monday. We'll send out a little infographic on what time it's going to start. So until then, hope you guys all have the best weekend. Stay safe and good luck trading. Take it easy.
Appreciate you guys.
Yep.
Appreciate you, Bailey.